Hey fam, welcome back. So today we're going to be going over the nasdaq, Tesla, as well as the recent purchases that we made in the portfolio. So with that being said, let's get it. All right, so the nasdaq did have a nice green day today. It's actually up quite a bit. You guys can see in this, technically speaking, this is a bear flag, but again, in order for it to confirm one way or another, it has to break out on one side or the other. It hasn't done that yet. We are testing the top currently. So the NASDAQ is up 1.5% to about 2%. I think it was up a little bit more earlier in the day, but of course we're getting the overbought signal now. So, it wouldn't really shock me if there was like maybe a slight pullback here to about the halfway point, retest maybe this high at 20,000, and then boom, start pushing finally out of this flag to the upside. I'm not saying that's going to happen for sure, but that's if this thing was going to break out, that's kind of what I would suspect at this point. So. Again, I'm not bearish on these markets. I just, as a trader, I would need to see confirmation one way or the other. Okay, so Bitcoin up to 88,000 looks like the corn of the bit finally wants to start doing something. Wow, amazing, right? So it is, and I'm actually going to show you guys this since we're on here before we talk about Tesla, because again, usually we cover the exact same assets day in, day out. That's kind of the idea here, right? Consistency. But what I want to show you guys here is we got the daily confirmation breakout candle yesterday, barely popped out of there, but it did, and now we're getting a follow-up candle. The main thing that would convince me that crypto is indeed actually going to go higher from this point, and again, I'm going to reiterate this until this happens, okay? I mean, we're getting a bounce, that's great and all, but again, and I'm not bearish on these markets. I'm not saying that we're going to go down from here, but I want you guys to understand that, I mean, back in those days in 2021, it was a little bit different, but you guys can see we got a pullback, and we did get a pretty large bounce, right, during the first dump, and then we got a huge pullback after that bear market rally, okay? And similar thing here. So what I'm going to say here, and I'm being completely and totally honest with y'all when I say this, I'm still going to stick with the point that I want to see a weekly candle close breakout above this white trend line, this one right here. Get rid of this actually, because that doesn't need to be there anymore. But this downtrend line right here, I want to see this week's candle close above it, okay? So that level currently is at 85,000. If we get a close above 85,000, okay, I could say that with some certainty that there's a likelihood we're probably going to push up to 97, 98,000, but I also want to see a weekly candle close above here, okay? And possibly even 2 weekly candle closes above this 98,000, just to be sure this thing is actually going to basically push to all-time highs. All right, that will fully convince me that the move is on. And what I suspect will happen even further is the altcoins may go up with Bitcoin, but they're probably still going to be quite cheap compared to the price of Bitcoin, even when Bitcoin gets into these levels right here. So I think there will still be plenty of time to buy anything altcoin and altcoin related. It's when the dominance starts falling that I'll say, okay, at this point, yeah, maybe the prices aren't going to be cheap on altcoins for very much longer, okay? All right, so anyways, I do still think there's a lot of room on the NASDAQ left to go up. The data points that I'm actually looking at, I'm going to share with you guys right now because these are important, okay? So we have consumer confidence tomorrow. On Thursday, we have I think it's GDP quarter over quarter, and on Friday, we have core PCE. So these are all going to be major indicators of whether the market's probably going to move up or down. All right, if consumer confidence and the what's kind of a double-edged sword. So if consumer confidence and the quarterly GDP come in stronger than expectations, that could cause the markets to, I mean, it depends on how the market participant, any given market participant is seeing this, okay? If it comes in stronger than expectations but not too strong, that could cause the markets to rally, okay? Because if it comes in too strong, they might say, well, crap, now the Fed's not going to cut rates, right? And if it comes in too weak, the markets may sell off and start flash crashing because, again, they might say, well, crap, now the Fed has to cut because it's an emergency, right? So we're kind of looking for that Goldilocks zone. Maybe a little bit weaker, maybe a little bit stronger, but not too weak or too strong, okay? So I know that it's complicated what I'm trying to explain here, but when you guys do this for long enough, you'll understand. All right, so it's not really called consumer. Well, I called it consumer confidence. I actually refer to this as consumer sentiment report. But it's forecasted a 94. If we get like, say, I don't know, maybe a 96 or a 92 or a 93, I'd say we're probably good to keep going to the upside. But if we end up getting like 100, 105 or a 90 or 85 or something like that, that could obviously spook the markets, and they may not like that too much. So could be a pullback right off the top of the bear flag channel that we're currently in. Okay, so you get the GDP growth rate quarter over quarter. Again, not too hot, not too cool on this one. That's kind of what I'm looking for here, just somewhere right around the expectations, not too far deviated from that. And then next one here is the core PCE. So I don't care about the month over month. That's whatever to me. What I care more about is the core PCE price index year over year. Okay. So I think in this case, it would be good to see like a 2.5 or a 2.6 read. If we get that, I would say we're pretty much set. Anything above and beyond the expectations, like a 2.8, 2.9, especially a 3 or above, I think the markets really are not going to like that too much. So again, right around expectations. All right, so the swing trades that you guys saw that we loaded into, I'm about to show you those actual trades here in a minute. The prices of those are finally going up. And the VIX is pulling back, which is great. We definitely want to see that, because if these markets are going to continue to rally off these extremely just disgustingly low lows on the stocks above the 50-day and the 200-day, if we're going to see an actual serious rally in these markets, we definitely want the VIX to come down. Okay. And again, prices are very, very cheap right now. So if you guys are sitting on cash and looking to buy, this may be the time to get in, if this is indeed just seasonal bearishness. Okay. And it's not actually a bear market rally. If this is it and we're going to all-time highs from here, then yeah, now may be the time to consider perhaps loading the boat. Again, not financial advice. All right. So next one here, Tesla. So I told you guys last week about this tweezer bottom. Okay. What I'm looking for very, very specifically in this case, because it's supposed to be a bullish move, a red to green candle. We got one of those. Okay. When we got the opposite here, this was actually a red to green, but it was the top of a move. What I would have preferred to see a green to red in this case, but it doesn't really matter. Tweezer top's tweezer top. In this case, in the bullish move, it matters more that it's red to green, but you can see we got our tweezer bottom, So tweezer top up here, that was pretty indicative it was going to drop. That's exactly what we got. Plus, we were very overbought, so that should have been a given, right? So this move has played out so far. Again, it's only Monday. We'll have to see how the rest of the week goes, but nice little bounce off support, structure, the trend line, and also that tweezer bottom right there, giving us an indication that likely it's going to go higher. On the smaller time frames, double bottom, right? Potential W pattern. A nice little gap up. That's also very bullish, coming off of oversold here. You got the bullish divergence, price going down, indicators down here going up. And obviously the same thing on the 4-hourly time frame, right? Now we get a golden cross on the 4-hourly time frame. That tells me likely we're probably going to new all-time, or not new all-time highs, but we're going up substantially, because last time we got one of these all the way back here in October of 2024. We did also get a gap up right at the start of the move. I don't know if you can see that right there, but it's right there. Okay. It was on earnings, so that's different, but still a gap up right at the bottom of the move, right? It's very similar. Went up a massive 110%. I'd be willing to say that this thing could probably easily go back to all-time highs from this point, just simply based on how oversold it is. And, TSLL, obviously 2x leveraged, it's essentially the same thing. It's just twice as volatile. So very similar, right? We got this gap here at the bottom of the move, got another gap, about to get the golden cross, massive, massive upside from that point. It was just stupid how much this thing went up, 350%. And the weekly, again, we got a essentially almost perfect tweezer bottom here, and then the move shot up, right? So far we're in the green. All right, now let's go over the actual trades here. Okay, so the portfolio account is up a lot today. Again, that's not really shocking. We have been buying this dip basically the entire time the market's been dipping. So we'll start with TSLL. I'm sure you guys noticed we have a lot more shares now. So yes, we do. That's true. We have 1,200 shares now at $12.53 per share. We decided to buy these straight off the market because the reality is we can put on cash secured puts and we'll get paid the premiums. But if, like, let's say we put on 2 cash secured puts this week at, say, a strike price of $9 or $10, but then the price of TSLL by the end of the week goes up to $15. Well, we got the premiums, but we're not going to get assigned the shares, so we missed out on the whole move, and we weren't able to pick up the shares at a discount. Now we got to pick them up at 15 if we want more shares. So in this case, it's kind of a double hedge, right? We put on the puts when the days are down to increase the premiums we get paid. In this case, the days are up, so we're not going to do cash secured puts. And on top of that, we buy shares straight off the market to ensure that the price isn't going to run up on us out of nowhere. Okay. So anyways, I'm going to show you guys that right now. All right. So I believe that was, that's odd. Why is it saying the 23rd? For some reason, these were placed on the 23rd. I don't know if that was pre-market or I have no idea what that was. Anyways, I know Robinhood has some extended hours, but I wasn't aware that we were actually going to get those shares during Sunday's trading session. That's interesting. Okay, anyways, regardless, 20 at 972, 5 again at 1067, which was today. And then we just said, well, it looks pretty aggressive, like it's going to run up. Let's just get our the position we want now, and then we can just hold off on buying the shares and let it rip. So 50 to 1088, another 20 at 1086, and another 80 at 1085. So I mean, we're not getting paid premiums for this, but not really a big deal. We kind of wanted to get 1,100 shares at $12, but this is good for now. So you can see the total position there right now. What exactly we're going to do with TSLL in the days to come, if anything, I'm not entirely sure. We'll have to let you know. So just cover the rest of these real quick. Okay, APLD. So we got, this was on Friday. We talked about this, but I don't think we actually showed you guys this. So 6.82 shares at 732. APLD is ripping pretty hard today, but again, we are still quite a bit in a drawdown on this one. Okay, let's see. Next one here is, we'll go with ALT. So each one of these swing trades positions, we just decided we were going to pop in $50 a week until we come out of a drawdown. Okay, and the price goes up. That's kind of the plan here. That can change. Obviously, if it does, we'll let you know. So 847 at 590 here. And you can see we're only down 4% as of right now. Next one here is FATE, F-A-T-E. So we're quite a bit down on this one. Not really too concerned about it. I mean, you got to understand these penny stocks, the smaller the market cap, the more volatile it's going to be. So it's kind of almost to be expected. Okay, 53.19 at 94 cents. And last one here, all the way down at the bottom, is a quantum computing stock. So APLD is an AI-based stock. NVIDIA also has position in it, and RGTI is a quantum stock. So I do think quantum computing is going to be a very big deal in the future. It actually has to happen truthfully in order, like if you're talking about like free energy and robotics and mass scale automation and all those kinds of things. Leveling up society and creation this is like million-foot view stuff we're talking about here. But if that's going to happen, something like quantum computing has to happen. It's not really optional. So I definitely see these quantum stocks doing very, very well in the future. Okay, so there's our average, kind of the drawdown right now. Not really that much. 5.3 shares at 943. Okay, so the last one we're going to cover here, and again, you guys already know we got our position on triple QT. So the next one that we have gone to is XDTE. And again, this is a weekly pair. We told you we wanted to see the market start to move up and give us some confidence that it's going to increase. We saw that. So we decided to go with XDTE over GPIC, and it has increased already. We're already in profit, not really that much, but we got 10 shares now. So the goal is to get to $30 a month. Once we lock that in, we'll move on to the next position and let you know what that is. So 4.29 shares here at 46.55. Okay, so the last thing I want to talk about here before I close this out is the first. So we were thinking initially we were going to do 30 positions at $30 a month, but we changed our mind and we said, no, that's too much. $50 a month, 30 positions is too much. We don't have millions of dollars in capital, so we want to make sure we're scaling this properly and it's something we can actually handle. So we decided to start out with 20 positions at $30 a month, and then we'll just scale it out and up from there. So here's what the 20 positions are, okay? So we have FEPI, AIPI, QDTE, XDTE, YMAX, YMAG, SPYT, triple QT. You'll notice that a lot of these are sector-based and or index-based. Okay, there's reasons for that. GPIC, GPIX, ACP, PDI, RIV, RA, BSTZ, triple QI, SPYI, IWMY. Again, we're actually not going to go with RDTE. We were initially, but we changed our mind. We're going to go with IWMY instead for the Russell 2000. And the last one is SCHD. So for SCHD and JEPQ, you can actually do options on those to get paid premium. So we may do that with SCHD. We'll have to wait and see. But of these positions, we already are well above or well above the $30 per month in FEPI, AIPI, QDTE, YMAX, YMAG, SPYT, and triple QT. So we already have, it appears to be 7 out of the 20. So we're about halfway there. All right. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.